Hello and welcome to Bloomberg Quint. We have with us today Mr. Sam Ghosh, Executive Director and Group CEO of Reliance Capital. First of all, congratulations, sir, on your result. So, net profit has increased, margins have increased. So, first of all, tell us, in fact, NPAs have improved. So, first of all, tell us what is the GNPA in home and commercial segment like?
So overall, in terms of our business, I think this time the profits have gone up nearly 3%, 207 crores. However, if you exclude the dividend we received from our life insurance last year, actually our profits are up nearly 33% because now we consolidate our life company. And if you look at even top line's grown at quite a phenomenal rate at nearly 3,700 crores. So overall, I think the company has done well in a tough environment. If you look at now specifically by business, as you're asking on our commercial finance and housing finance, on our commercial finance business, our book size now is nearly 17,000 crores, and profits have also gone up quite substantially to nearly over 50 crores, and that's nearly growth of over 30%. Same way with on the housing finance also, our profits are up at 30 crores, and the book size now is about 8,500 crores. So we've been ramping up our housing finance quite substantially, and obviously with that, our NPA levels also have stabilized. In the commercial finance business, our NPA is nearly 3.4%, whilst on the housing finance, it's about 1%. So I think overall, for that book of business, obviously business has been good. If you look at our insurance businesses, both our general insurance and life insurance, on general insurance side, we have grown our business to 900 crores plus, nearly 5% growth. Profits are nearly 23% up at about 35 crores. And on the life insurance business, we have brought the company to break even. Last year we showed a loss. This year we want to make sure that the company breaks even quarter on quarter, and that's what it's doing. Though last year in first quarter we showed a profit of 35 crores, but this year first quarter is showing a break even, and for the whole year we'll also try and show a break even. And if you look at in terms of total premium, it's up at 650 crores. Renewal premiums up, and also if you look at persistency, also has over 60%. So I think that's also a good sign that persistency is improving. Finally, on asset management business, which is doing very well, profits at about 122 crores, up nearly 15%. And AUMs are nearly 1,60,000 crores for assets under mutual fund assets under management, but total assets under management is nearly 3 lakh crores. So I think again a good achievement. Also, our broking and distribution has come to break even this quarter, and going forward it'll start showing profit.
Talking about GST, now GST has seen the light of the day finally. So how do you think it will impact your business and your consumer base?
See, I think overall, obviously, we have to wait and find out what the rates will be like for each of our businesses. But generally, in financial services, as long as you're giving a service, you have to, GST will be, it's a consumption tax, so everyone will be affected by this, and we'll also be affected. However, let's wait and see what the rates are like, and then on that basis, we can take a decision.
But still, what is the kind of guidance that you would like to give once GST comes in?
No, I personally feel like for any consumption equipment, you have 5 to 10% increase in whether it's because in place of service tax you have GST. So there will be an impact. We don't know what the impact is so far.
Okay, and what is your guidance? What is the guidance that you would give for the next quarter, coming few quarters, in fact?
Yes, so if you look at all our businesses, that they're on track and they've been performing well. If you look at our lending business, both our commercial finance and housing finance. On the commercial finance, we expect the book to continue to grow at about 16-17%, but on the housing, we'll grow at over 30%. And then if you look at our asset management business, again, we have shown growth of about 5 to 10%, but we expect that to be about 15% for the year. Same way with our general insurance business, we've shown growth of about 5-6%. Hopefully it should be over 10% in the next few quarters, 10 to 15% rather. And life, I think we'll try and come to whatever we had achieved last year. So it's growing slowly because our focus has changed. We are focusing more and more on productivity of agents rather than just pushing top agents to perform. And broking and distribution also has been growing at a fairly phenomenal rate.
And you recently tied up with SVCB. Any other tie-ups, mergers, acquisitions that you're looking at?
Yeah, so if you look at our general insurance business, they have tied up with IndusInd Bank, they have tied with Andhra Bank, they've tied with SVC, and they've also been tying up with a number of motor manufacturers also. And I expect that in the during this quarter and next, we'll try and tie up with some more PSU banks. Same way with the life side also, we expect some tie-ups with PSU banks.
All right, Mr. Sam, thank you so much for talking to Bloomberg Quint, and congratulations once again.
Thank you very much.